Good morning. Welcome to IG's early morning call. It's Friday, the 12th of May. Let's take a look at the headlines as we see breaking news coming through from the UK economy. We are seeing GDP coming through an expansion of 0.1% in the first quarter, which matches the previous estimate. But interestingly enough, the March monthly GDP shrinking month on month. Now, this is a surprise, bearing in mind the Bank of England's relatively upbeat assessment of the economy as it looks out for the rest of 2023. There's been some big tumbles overnight in base metals. We'll get an update on what's happening with copper, with zinc, with nickel. Demand fears for the second quarter haven't developed as many had been expecting, especially from China. And all this comes as we see a continuation of the recent drop in the price of oil. We're on for the fourth week of declines for both Brent and WTI. Take a look at volatility. We're down for a third day in a row, indicating that these risk assets back in line, 20.16, and we are expecting a slightly stronger start to the European trading day today. You can see on the 24-hour markets here in London, second day in a row of gains, although we did see a loss yesterday on the cash session. But at 77.53, we're something like around about 27 points up, I think, on from the cash close as of last night. So the fact we got the MACD pointing down, I think at the moment is a little bit sort of blindsides you. I think, as I said, we are looking for a slightly stronger start on the trading day today. Some interesting news coming through since the close of last night. I want to get you an update on what's been happening with GlaxoSmithKline and Haleon. There's been a sell down in some shares, but I'll get an update on that in just a couple of moments' time and work out what that could mean for the price of GlaxoSmithKline at the start of today's session. German DAX, same sort of price action that we've got here. We are up at the moment after yesterday's losses. The German DAX at the moment trading at 15,878. So a stronger start in the DAX, as well as what's happening in France at the moment. And you can see, in fact, the French markets, if you look at the candle shape here, we are absolutely at the top of the candle, indicating no sellers in the 24-hour markets at the moment. So looking for a stronger start in the French markets as well. Overnight in Asia, Japan, particularly, the markets there up almost 1%. SoftBank shares tumbled 5%, bucking the overall index trend today, after SoftBank reported an annual loss of $7.18 billion as the value of its portfolio dropped. The company reporting earnings during the day there today. Losses on the Hang Seng S&P ASX 200, despite the fact we've seen a lot of these base metals on the way down overnight. It managed to eke out a gain on the session, albeit by a relatively small margin in what was overall a mixed day. Wall Street closed yesterday. Let's read what's been happening with those indices. It really has been an amazing recovery in the Nasdaq Composite up over 1%. S&P 500 also enjoying a lift today. Dow Industrials down on yesterday's session. Look at what's happening in terms of the 24-hour markets. Nasdaq is now 25.83%. Intraday today, taking us up to levels not seen since August last year, August the 19th to be precise. Very, very close to the peak that we saw back in August last year at 13,720. We've got around about 200-300 points to go before we get to that level, and that will then take us back then to levels not seen since April last year. But techs have had a spectacular recovery. I was talking to one fund manager yesterday who was saying, do you remember 3 or 4 months ago when we were talking about this market at the beginning of the year, when we saw the big tech companies under a lot of pressure, and they were at that point saying that things could turn around? And I was a little bit more skeptical than that, but in fact it has been an absolutely stunning recovery in this market. And as I said, this the value of this market from the beginning of the year, in fact the 6th of January, has recovered by a margin of a quarter of its overall market capitalization. Doesn't seem to be let up either in this, as we see a continuation of this push higher in this market, currently trading at 13,416. So that's how things are looking at the moment on the early trade in the US market. Just want to take a look at what's happening with the Dow, because this is a lot weaker. You can see that drop we had yesterday. We do have a green candle at the moment from the 24-hour markets, but it is only marginal. And I think there's more of an inclination, I think, to sell this with the momentum on the way down, with money going into techs at the expense of some of the old economy stocks. Now, let's return to this headline that we had at the top, talking about the UK GDP number. UK economy expanding 0.1% quarter on quarter, in line with expectations. The Chancellor of the Exchequer has been out on the stump this morning, talking to voters, reacting to the release Jeremy Hunt saying it was good news the economy is growing, but needs to stay focused on tax, labour supply, and productivity. But the March monthly growth data raised eyebrows. Monthly GDP shrank 0.3% compared to February, anticipating a flat ONS statistic. Darren Morgan said the fall in March was driven by widespread decreases across the services sector. Remember yesterday, alongside that 25 basis point rise in base lending rates to 4.5%, the Bank of England revised up its GDP forecast for the 1 year ahead to the second quarter of 2024 from a negative 0.3% to a positive 0.9%. Now, that's the biggest such upward revision in the history of the independent Bank of England. Remember, that was given by Gordon Brown back in 97, 98, I think it was, to Mervyn King and the Monetary Policy Committee. So that is, 25 years. This is the biggest upward revision in GDP. So we've got to see a big move up, I think, in that to change things. UK industrial production also out this morning, falling 2% in March year on year, less than a 2.9% drop expected by economists. I want to show you what's happening with sterling. This drop in sterling yesterday was a surprise to me for sure, bearing in mind the Bank of England was so upbeat. And we're trading at the moment at 125.17, not much move on from the drop that we saw yesterday in sterling against the US dollar. A little bit later on today, talking about the dollar, we've got some economic data out in the States, 1:30 p.m. import and export prices for the month of April. Michigan consumer sentiment expected at 63 in May, down from 63.5 in April. I want to show you what's going on with the euro-dollar trade. Yesterday, we saw a loss in the euro. US dollar really gaining across the board, and I guess that was partly responsible for that slide we saw in sterling. 109.29 is where we are there. If you're short on this going into the trade today, your stop would go above the 110 level, 109.29. Looking for the next line of support, you put a fib on here to work out where we were from the lows. Let me just quickly talk about what's happening there. You've got 61.8% support at 107.39. So if you're short on this, stop goes above the 110 level, and that would be your price target at 107.39 is the area of support there to watch out for. Take a look now at a risk event for the week starting Monday, the 15th of May. And I want to focus on what happens on Tuesday, the 16th, with the German ZEW economic sentiment out in Germany forecast to rise to 7 from 4.1 in the previous month. This recovery, if it continues, presents potential upside risk as economies across Europe seem to be tending to an upside surprise. I thought I'd take a look at what's happening with the euro trade against sterling, though. We've seen that drop in sterling, and as a result of that, we've seen the euro rise. But I want to show you this in the context of the technicals on this chart. You can see these steps lower, these lower lows that we've got, these lower highs. And if this continues with trade below the 200-day moving average, I think it's an opportunity potentially to take advantage of what potentially could well be a continuation of this drop that we've seen. If you were to go short into the numbers on Tuesday, I think the Tuesday data could be a little bit of a disturbance to the market. Here with the current trade at 87.31, your stop would go up here at just below the 88 pence level, and you'd work out a potential break of this line of support down here that we had the low point we had at 86.61. And then the potential then on to go onto this level down here, which is the drop that we saw down to the 1st of December. And that would be a new low for the euro against sterling. But I think if we see a continuation of this drop, that would be an opportunity to sell this market down. But certainly the risk event of the week, I think, is almost certainly going to be the ZEW on Tuesday morning. Now, let's move on to take a look at a couple of these stocks worth watching at the start of today's European trade. We've got a couple of earnings out. What I'll go first for is what's been happening with Haleon and GSK. Remember last year when GlaxoSmithKline sold its personal consumer healthcare unit and it spun out into a company called Haleon. And Haleon has done some really brisk business on the upside. And late yesterday, the drug giant GSK said after the market closed that it plans to sell as much as £823 million worth of shares in Haleon. That's 2.5% of the Haleon market capitalization. Let's look at what's happening with the share price. This is the entire share price since we've seen the move that we've got from the move that we had at the beginning of trade back in, what was that, July last year on the London Exchange. Since then, Haleon has done brisk business on the upside and in fact went to a record high on the 21st of April at 357 pence. Since then, it's a little bit of consolidation. Yesterday, we heard news that GlaxoSmithKline will sell as many as 240 million shares through a placing to institutional investors. GSK's current stake is just under 13%. Now, it has sold this at 335 pence. So it's a discount to the trade that we've got as of yesterday's close by a margin of 2.4%. Pfizer is another company with a large chunk of Haleon, and both GlaxoSmithKline and Pfizer, Pfizer holds a 32% stake in Haleon. They've each undertaken not to dispose of any further shares in Haleon for a period of 60 days following the settlement of the placing. So that is the level at which they've been selling the shares down at 2.4% discount, 335 pence on from the close yesterday at 343. So a little bit of pressure could be seen in Haleon stock this morning. GlaxoSmithKline will open at 14.43. Let me just move on to another chart. The Hut Group, THG, is worth looking at the start of today's session. Let's look at what's been happening with THG Group. With some breaking news that we've seen just coming across the wires. It ends the deal talks with Apollo. Now, you'll remember shares rose 40% last month after the preliminary buyout proposal came through. But you can see in the last week or so, there's been almost total evaporation of all that benefit that we saw back on the 17th of April. And the Hut Group confirming this morning that all the talks are over. Between it and Apollo. Apollo have been one of these interesting companies that have been looking to buy up shares in the UK. There's been a lot of talk about companies being on the block. Numis is one of them. The stockbroker specialist banking institution is very much on the block. John Wood Group is another company, of course, we've been talking about recently about being bought up. And there's been a lot of speculation about the fact that some of these companies are just not priced correctly. In other words, they're very cheap on the London market. But THG is one of these companies which I think has got its own problems. But Apollo saw something in it, but has now decided that the deal will no longer happen. And THG has ended deal talks with Apollo. Be interested if Apollo comes through with any improved offer on the business. Let's look at some other companies, what's been happening. I'm going to go to the French markets and take a look at Societe Generale, which has come out with numbers better than expected quarterly earnings. This is the third largest bank in France. Net income rising 5.7%, 868 million euros. And that's almost double the average of four analysts' estimates compiled by Refinitiv. This has been driven by a strong FICC trading performance. That's fixed income commodities trading performance up 16%. Now, like Credit Agricole on Wednesday, SocGen FICC trading gains surpassing the larger competitors like Deutsche Bank, Goldman Sachs and BNP Paribas also more than offset the 11% income drop in its retail division. Retail's been under a lot of pressure because consumers finding they're going tough because of high interest rates. I want to show you the share price chart. It trades under the ticker GLE. Let me just get to the end of where we are. It'll open at 21.82. If you're long in this stock, goes underneath this area down here, just underneath the 2100 level, with a view potentially to breaking the highs that we saw at 22.91 back on the 20th of April. I suspect that could be an area of interest in the market to watch out for. If you're long on this, that would be your price target, but the potential for going past that, I think, is possible this morning. Group revenue was down 5.3% to around 6.7 billion euros. SocGen maintaining its 2025 fiscal targets, though. So there's some good news, I think, coming through in the French banking sector this morning. Meanwhile, in Germany, the insurance company Allianz quarterly profit jumping a whopping 329%. Yep, you got it, 329% to just over 2 billion euros. This marks a spectacular return to business as usual for the German insurer. Last year's performance was hampered by some $6 billion worth of settlements and fines linked to Allianz Global Investors, one of the group's funds involved in a fraud case in the United States. Figure, however, fell short of a 2.33 billion euro consensus forecast, despite the fact we saw that spectacular recovery in the numbers. It wasn't as high as many had been hoping, so potentially has some downside, I suspect, for shares at the start of today's trade. Let me just show you what's happening. 211.37 is where this stock will open in the session today. If you're short on this, stock goes above these moving averages around about the 21,800 level. 21,137 is where we're starting the trade on the session today. So Allianz, another stock to watch out for at the beginning of the session in European markets at the top of the hour. Now, the second quarter is traditionally a peak demand period for industrial metals, especially in China. But demand this year has remained subdued, despite the fact that China has come back with a vengeance after the COVID lockdowns at the back end of last year. Uneven recovery we saw recently in the Chinese economic data, sluggish export market, a rise in supplies in the market are weighing on copper prices. But it's not just copper where we've seen some big moves in the market, it's other base metals as well. Let's take a look at copper, though, to begin us off. Yesterday, a spectacular drop in the price of copper, and you have to go back some distance before you see a single day's decline like that, crashing through the 200-day moving average, now at the lowest level in 2023, and heading for the biggest weekly drop since November. But it doesn't just stop there with copper. It is other base metals as well. I want to show you what's happening with aluminium. Yesterday, aluminium crashing through this line of support at 22.51. It's opened this morning with a further decline down at 22.09. We're currently now trading at levels not seen there since the 31st of October 2022. So copper and aluminium on the way down. Let's take a look at nickel as well. Yesterday, some big declines and closing out yesterday's session below this line of support at 222.67. They're now at levels not seen since the 31st of October. And it doesn't stop there either, because we've got zinc as well, crashing below that line of support that we've seen zinc establishing just a week or so ago at 25.84. Yesterday, moving lower spectacularly down to where we are pretty much at the moment on the price of zinc, and levels there not seen since November 2020. So I've got concerns about the outlook for demand. It's not picking up as many had been expecting in China, and as a result of that, we've seen some new lower lows across many of the base metals. Doesn't stop there either, because lack of demand is showing some really big declines that we've seen in the price of the crude oil markets. Let's take a look at what's happening in WTI. Third day in a row of losses there, not quite as low as we have been in the last couple of weeks, but we're very close to once again to breaking the $70 level. Certainly poised to record another week of straight declines, in fact, the fourth week in a row. The new round of oil output cuts announced early April by some members of OPEC Plus has failed to boost oil prices as expected. Instead, these have been hit by interest rate hikes and concerns over the US debt ceiling, and a lot of question marks now about many of these economies going into recession, although we now hear from the Bank of England that's not their base case that we've seen. But I think this is the concern. In the longer term picture, you can see here for this is Brent continuation of these declines that we've got. I'd be interested to see what OPEC decides when it wants to regroup and work out just what it wants to do in terms of supplies to the market. But I think the long-term outlook for oil continues to remain on the way down, as many consider the potential for recession around the world. Last week, the Baker Hughes rig count fell by 748. The number of oil rigs in operation fell by to 588 from 591. So you can see there oil coming out of the market, but despite that, we've got these prices on the way down. Let's go back to the charts and take a look at what's happening in other areas of the market briefly. Want to look at what's going on with spot gold. Not much to report. Third day in a row of losses there. We're now $11 above the 2,000 level. I think at the long-term picture, still got more higher highs to come at some point after some regrouping. We've got the third day in a row of losses. Spot silver has been a better chart to watch out for. I think in terms of the moves that we've had yesterday, as a stunning decline in the value in the one-day chart for silver, and it's opened up further on the downside at 23.99. So losing some of the near 50% gain that we've seen in silver prices since September last year. And I want to end up with a couple of other commodities I think worth looking at. Orange juice. We have seen the first weekly decline, I think, since the beginning of March, or we're on for that at least. The market's expected to open at 247.23. Some big declines, eating into some of the gains that we've seen recently. So it's just a little bit of air let out of the tyres, I think, more than anything else. But the other area of the market worth looking at is coffee. Robusta coffee trades in the London market, and yesterday ended down at 23.88, waiting to start today's trade. Again, it's just the same sort of story. In the last couple of days, we've seen, excuse me, some 12-year highs for the price of coffee. So it's just a little bit of a move lower as we see money come off the table across the markets in terms of commodities. So I think that's the only reason why we've got this market on the way down. There's no real specific news that I can see that is a reason to sell this market down. It's just a question of a little bit of a retracement in what is otherwise a market that remains on the way up on concerns about the fact that we've got supplies restricted because of poor weather hitting crops. And that's it. Back at 10:30, we're charting the markets. Do watch out at the start of the day's trade for the Hut Group, unwinding the rest of that benefit it had from that deal. Initially, hope was going to see it sell out to Apollo, which talks have now ended according to the Hut Group this morning. Also watching out as well for the reaction to that news last night, that Glaxo selling down part of its stake in Haleon. Back at 10:30, we're charting the markets. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.